Hi, my name is Valentic, Buyer's Advocate and Director from Advantage Property Consulting. Today I'm going to give you a market update on where I see the market. The question I'm asked often is, are we at the bottom of this cycle? And it looks like we may be in certain areas, in certain types of property. It looks very similar conditions to September 2012, where we saw the last bottom of the cycle before we saw a 5-year up cycle up to September 2017. So consumer confidence has returned, the level of inquiries from buyers is definitely up, and the activity at auctions has increased from around 40% in December clearance rates to now around that 64% mark. We're seeing more bidders at auctions, and these conditions show that buyers are a bit more comfortable. They feel that the market is a bit stronger and on the way up. Let's have a look at some of the positive factors that will contribute to this market upturn. One is the RBA reducing interest rates. Now, they've already done it once, 25 basis points. Looks like there might be another 2 to 3 interest rate cuts in the next 12 months, which is only going to create more demand, particularly from investors. Investors have deserted the market. They're only about 20% of the market. They're usually 50% of the market in the peak market, and they are the big difference. Owner-occupier lending is around the same. It's just the investors that have dropped off, which has really impacted the market. Secondly, APRA is going to loosen the screws and the caps from 7.5% capacity there to be able to borrow, and just have a cap of around that 6% mark, which is effectively going to make it easier for investors and other home buyers to buy more property. A very positive factor was that the government was returned. There was no change in government. A change always causes a bit of hesitation because it's better the devil you know rather than something new, and I think people have just got on with business. Given the no change, there were no changes to negative gearing, capital gains tax concessions being halved, and the inherited tax being introduced, which is 40%. So they were all positive factors that influenced the market. So where do we see this market? It is a two-speed market. Firstly, the apartment sector hasn't seen a lot of growth in the last 7 years. I think that sector will stay fairly flat, but I see a recovery in the housing sector. A lot of inner suburbs have seen median house prices drop 20 to 30%, but they went up 60 to 100% during that 5-year up cycle from September 2012 to September 2017. So I think it's really important to focus on land value, because the houses will have that land value, and land is king and underpins a property's growth. Units and townhouses are the in-between apartments, and I think they will again pick up as long as they've got some land and some courtyards. So really focusing, I think, on land. As always, land appreciates, buildings appreciate. We'll see the strongest gains in the next couple of years. So it looks like we're all moving into a positive upswing market. I think there'll be a bit more FOMO, fear of missing out, as some of the buyers miss out, which we've done for clients as well. Please don't hesitate to get on our website, check out information about our Buyer's Advocate, Seller's Advocate, property management, group block purchases, as well as subscribe to our monthly and weekly market updates. We look forward to seeing you next time.